Hey guys, and welcome to this week's property news. So to this week, interest rates are up 0.25%, so the big news. Is it big news? Do you know what? I'm glad that it's happening. Not glad because of the cash flow, obviously, but I think returning to what is normalization, if that's the correct word, is actually a good thing. And I think actually with each little step, slowly and gradually, we get back to normality. And I think that's quite a good thing for the market. It means the pound will be a bit stronger, even though it dropped. You know, there's a whole heap of I mean, you read the news, it's all over the shop. You know, and that's the big thing right now, is that, you know, UK rates actually, I think, is a good thing rising. It's been like this for over a decade, or still the lowest in a decade. You know, so that is happening. If it affects you, you need to look at your cash flow and make sure that it doesn't affect you too much. If it does, then now's the time to start taking action, repositioning your portfolio, because now is the time to actually really do that, to get in before it's too late, okay? The general trend in rising is interest rate rises now, so you need to get in sooner rather than later, okay? And remember, the tax increases are also starting to bite now, okay, with each year that goes by. So that's the first thing. Now, actually, coming back to the bigger thing, which is the confidence in the economy, is actually quite good. And I'm amazed. I'm not amazed at all, actually. It's amazing how the media is painting such a bleak picture, but the statistics are actually showing nationwide, you know, 2.5% this year growth. You know, just between June and July, 0.6% increase, which is quite good. You know, these stats are still out there, so there's positive stats out there. Now, sure, London is dragging the statistics down, okay? And what you could also realise is July to August, you might find that things aren't as bright, because let's face it, the weather's been fantastic, you know, sitting in the, you know, sweltering sun and that's a great thing for people and lifestyle, but not necessarily a thing, because people don't necessarily want to go out and look, they want to make the most of it, because let's face it, you know, when you have 1 week of sunshine, you want to make the most of it. The reality is we've had multiple weeks and a World Cup thrown in there with fantastic weather. So really it's been unseasonably slow, but it's still done quite well. We might find that July, August, actually the stats to slow down. August is typically the holiday month for Europe, so everything shuts down, you know, and people go on holidays. That's normal, so expected in the statistics, and no doubt I'll be saying this on a weekly basis. You know, things are down again, but this is what it is, all right? So that's the key there. And I think it's interesting, you know, rates lowered, and the first thing Fergus, one of the landlords, did was effectively raised his costs, or, you know, his costs on his things, his rents. Now, the interesting thing there is, of course, the papers vilified him, you know, but what are we supposed to do? We're investors, we want to turn. A normal business, any other business, if your costs go up, you have to raise your prices. But for some reason, the government are trying to restrict that. Not only are they taxing us on our income, not our profit, but they're also making it even harder to, you know, to put effectively rents up. You know, ridiculous. But anyway, let's talk about London. So London, look, London, as always, I think London will astound. But right now, London's not doing too good, and what we're seeing is Countrywide and Foxtons are both paying the price. They're both two big high street brands. Countrywide have a number of different high street estate agents. So whilst it may not be a Countrywide store you go to, it could be a Hamptons, you know, it could be a whole range of them. There's about 30 different brands they've got that they control. They are the largest estate agents or property services company in the country. Okay, you know, Foxtons lost 2.5 million. So you can see that it's not necessarily the house prices are dropping dramatically, but the transaction levels are, okay? So now's the time to bag yourself a bargain. But remember, prices could come off some more, so you've got to be wary of that. And if you're going for long term in London, you'll never be disappointed. The fundamentals are fantastic. So I just wanted to raise, so three different articles. You know, and this is the media. You know, you've got positive, you've got negative. So you've got, you know, North America, you know, basically loving UK property still. Now, interesting, when you read this, it's a Wall Street Journal talking about commercial property, you know, how they love it. But the reality is they still love UK property residential as well. That hasn't waned. And actually, we're seeing more and more foreign investors. So in actual fact, we're seeing more foreign investors come to the market now looking to spot a bargain. Now's the time, is the time to get in. As long as you're negotiating well and as long as you're playing the long-term game, then you're fine. Yes, you might see house prices drop a bit, but if you can get the discount in there and buy below what is the actual value now, well, you can build in your profit, and that's sort of bottoming out. I don't think there's going to be a massive drop. Now there's always that risk, but I don't see it at this stage. I see the fundamentals of the market very good, okay? But that doesn't mean you're going to make huge amounts of money short term, okay? So if you're trying to get in and out short term, flipping, those sort of things, forget it, okay? Someone tells you that, tell them to get on their bike. Another one, global investors wane. This is totally against what we're seeing, but at the end of the day, global investors waning, or their interest in UK property waning. I don't really know, but there's a report out, and apparently that's so. So another one, house prices slipping. Not just in the UK, but in Australia, Canada, US. A number of different countries are suffering from this. And I guess for me, the reason for this is all of a sudden we've gone from being a globalization, heading in the globalization direction, we're turning in on ourselves. And this is the pendulum swinging, and then it's got to the extreme, and I think it's starting to swing back now. So we've gone the big push for globalization, okay, which has happened until probably the last 3 or 4 years. 2016 was really the turning point. Brexit was a turning point, a big turning point. Trump getting in, a big turning point. And now we're starting to see the pendulum come back to where, localization, and we're focusing on our own internal things. The overriding push is still towards globalization, because now politicians and countries are having less control, and corporations that are global are having much more control. That's one of the big sort of trends that you'll see over the next few years, next decades, I guess. So coming back to Brexit and just finishing off on Brexit, the bottom line with Brexit, actually, there's an article here about, it's not letting, the appetite isn't disappearing for UK property, and it's not, okay? UK has been around for hundreds of years. Brexit, interestingly, is not going to stop it. And the appetite for property, people who see long-term value and are looking for long-term returns, they're still buying. And what they are doing, and the reason there's an appetite for it, is because they're seeing some opportunity for discount, which is fantastic. All right, guys, have a great week, and I'll see you next week.